Hey, welcome guys. We're going to be looking at Tesla today and also time frame continuity and how that plays into your trade using the STRAT method. All right, so stay tuned. We're hitting this thing right now. All right, check this out. We are looking at Tesla, and this is how I have my setup when I'm trading. This is what I use to see exactly what's happening. I've got my watch list over here. I've got a small little screen over here for the 15-minute, and whatever I put on the off the watch list, it shows up here, and then whatever I put on my first symbol number 1, it shows up down here on the bottom left on the 15. What I've got is a 15, the 30, the 1 hour, the daily, the weekly, and the monthly. So this gives me an idea of what exactly is happening, and this is what's important with time frame continuity. You can think that you might be experiencing a bullish trend or a bearish trend, but you need to look at the big picture. What exactly is happening? It also gives you an idea of if you are going to go long or go bearish, like let's say this end of the day today, we had a little bullish jump. And could you have made some money on this? Sure you could. On an option close to the end of the day on Friday, I think I would have probably gone to the next week, because time frame or time decay just eats you up alive on a Friday. So I mean, it's extremely risky to do anything like that, and I would advise against that, although I'm not your financial advisor. Anyway, so can you make money on a quick little scalp going up at the end of Friday, the end of the week? Of course you can, but it is risky. You've got to know exactly what you're doing to get in and get out without getting ripped. So time frame continuity comes in like this. You're going to look at the shorter, the 5, the 15, the 10, the 30, the hour, and see exactly what's happening. So yes, in the hour we see here that in the last 3 hours there was a movement up to the upside. Same thing with the 30. Could you have made money? Again, yes. But if you look at the longer time frame, look down here. We are in a downtrend on Tesla. This is the daily. Look at the weekly. Same thing. This is a 2 candle to the downside. The previous 2 candles to the downside. 3 weeks ago, they call it a 1 on the STRAT if you're using the STRAT. It's an inside candle. It did not break above or break below. So what we're seeing here, and even before that, you look, it's just a down, it's heading down. Look down at the monthly. The last 2 months, even though this broke above the top, it still closed on its way down. And then what happened at the beginning of this month continued the downtrend. So there is your continuity. That's what's happening. It is a downturn of the stock. Again, can you scalp and make money? Yes, you can. But you got to be extremely smart, and if you're new to trading, I would advise against it. Stick to something that what you see here. It's something on the downside. Get into something like that. Go short, play an option, do puts. This is how you trade with time frame continuity. And today was a killer day. You could have made a lot of money today on options, on puts, on Tesla. Again, we're looking here. Let me blow this up a little bit so we can see exactly what's happening here. So at the beginning of the day, we had this candle, and then what you would do is break. Once it breaks to the downside below this candle, that's confirmation to get in short. What I saw here was after this candle started forming here, it had a little wick up, and then the price action started going down. So at around 708.29, somewhere in that ballpark, and then maybe a little farther than that, a couple dollars after that, then you could have got in on a put, on an options put, or gone short. And the rule of thumb is, if this thing, the next candle that forms, if it rises up and above your entry point, wherever it might be, like So if this was your entry point here after it broke below the previous candle, let's just say this is your entry point. Okay, you got in, you're going down, it's going down, and then this next candle starts to go up. Hold on to your pants. Don't jump off the ship yet. But if this thing starts climbing up and gets back to this range here, it's probably a good place to put a stop. That's exactly where you would want to put a stop. And of course, if you got in, let's just say if it was a $100 option, by the time it gets back up here, that option's not worth $100 anymore because you got time decay on options. That's what's very tricky about options is the time decay. So be careful. So you would set your stop there where you got in and then just ride the thing out, okay? So this candle went up a little bit, then went down, okay? Started coming back up. This next at my time, Pacific time, 7:15, is when you would kind of start looking, okay, it's starting to be an inside candle. And number one, you see this, it's an inside candle. Did not break beyond either parameter of the previous day's candle. So it's an inside, it's indecision. Do not ever get in a trade when it's inside, but you're in. So hang on. So what do? Is after this candle forms, you want to lower your stop. So what you want to do with this is move your stop, right? Where do you want to move it to? The bottom of the previous candle? That's a good place for it. And what would happen was if this candle breaks above that, then you'd be out of the trade. But guess what? You're in the money because remember, you got in back up here. Okay, remember your entry was here, your stop's here. If it would have broke above that, then boom, you're out. Your profit. Doesn't matter. You're making money, you're done. So you wait, the next candle, what happens is what? Another one. It didn't break above and didn't break below, so you got another one, another time of indecision. So what do? You just wait. Then what? You could possibly lower this stop again. Keep lowering that stop, right? Lower it down to the previous candle's high. So if it breaks above that, then you're out. But see, this candle never broke that. So guess what? You're not stopped out. You keep riding the thing. Do you see where I'm going with this? You continue to ride this and keep lowering your stops. Okay, you keep moving your stop down to here so the previous candle's low. On this one, the next candle's low. And there you go. You're stopped out. But in that time, we can see by looking at our trade on Thinkorswim here, and it'll show us exactly what was made, what could have been made at that time. Let's go look at these numbers. So I hit the trade tab on my Thinkorswim. It's right here, and it's going to show you the date of your option here. So mine expired today, May 20. So for example, let's just say you got into a trade like at 660 on a put. You see where it closed today at 0.01. So you made a penny if you ran this thing out, if you let your time expire. Don't ever do that unless you're in the money. So you right click that and then you say send to, and what tab you want to send it to is number one, or whatever you have your tab set at. You see where it showed up here? Just showed up right there, didn't it? Okay. So now you can go to look at charts, and the chart that's going to show up is the chart of the option. This is not the price action of the real stock price. This is the option price. And what time did we get in our trade? We said about 6:45 candle. So looking back here, we know that our 6:45 candle's here. So we got in somewhere around halfway through that point. So let's just say our entry point right there was at, we'll just draw a little line here, and we'll say that was 95 cents on the option. And of course there's the contracts, the amount of contracts. So our entry price here was 95 cents, okay, or $95. That's our outlay. Okay, we keep riding. Remember, we're setting our stops, but we're not getting stopped out. We're not getting stopped out. And we finally got stopped out probably about 8 o'clock, right? So we kept moving our stops up or down. So once it would cross it, then that would be it and we would be out. So it'd probably be somewhere around this point right here that we got ourselves out, because it went up and it started coming back down and we got ourselves out. So that is 742, 748, somewhere around there. So you were in at 95 cents. You would have been out at 7.59. So in real dollars here, you went in on an option for $95, and in an hour and 15 minutes, you made $654. Pretty good. This is the STRAT method. This is what it tells you. This is what is so important to see the time frame continuity of what's happening to the stock. Overall, what is going on? The emotions of the stock market is the chart. This is the emotions of the people that are telling you exactly what's going on, because they tell you what they're doing. The candles explain to you what's happening. And this is what's most important about the STRAT. The STRAT method is all about the candles and their formations and what the next candle is going to do based on the previous candle, and then the setups. This is what is going to make you a successful trader. The best thing I'd ever seen was the STRAT. The best thing I ever learned was the STRAT, and I'm still learning. I'm far from being an expert on the STRAT. You want an expert? Go to Rob Smith himself. Rob Smith in the Black, his channel. He explains it. He goes through charts every day and explains what's happening based on the STRAT method, which is awesome. It works. It's been working for me since I've implemented it in my trade. I'm far from where I need to be, but I do see better earnings on my trades when I started using the STRAT method. And remember, in today's video, what we're talking about here is time frame continuity. If everything is lining up, if your time frames are all lining up to go one way, then you're safe to go in that trade that way. Again, look at this right here. You see this? This is on the hourly. You had 4 hourly candles on the way down. You could have rode this thing all the way down to the bottom. Why? Because look at the daily. We're on a downward trend. Look at the weekly. We're on a downward trend. Look at the monthly. We're on a downward trend. So what does this tell you? Go bearish. Can you go bullish on this? Sure. For like 15 minutes, for 30 minutes max. You know, here at the end of the day, 45-minute run up. Could you have made some money? Sure. That's 639 to 664. That's a $25 gap. Could you have made money? Of course you could. But you're not going to hold this thing when you're in a bearish run. Look at this thing. I mean, look at this thing. This is the monthly. For months, this thing's been going down. But if you're good and you can execute the STRAT, you can get in and out of these deals very quickly without any blood. I appreciate taking the time out and checking this out, and hopefully this will help you. So I'm just, words of advice is just to learn the STRAT. Understand it, learn it, go Rob Smith in the Black, and adapt it into your trading. It's going to make a world of difference. All right, we'll catch you next time.